Good afternoon. Welcome to the TheoTrade afternoon video. I am Blake Young. Today is November 26, 2025, the day before Thanksgiving, and we're going to talk about tax rates. It doesn't seem like a very normal time to talk about taxes, but we did talk about it in the main room, and I'm going to show you how I'm using tax rates to select stocks. Now, before we get into that, we'll just cover quickly. The S&P 500 has had 4 very bullish days after a big single-day sell-off. We saw 4 bullish days erasing all that sell-off and pushing higher, but we're doing it on lighter and lighter and lighter volume. It is a holiday week, which tells us that we are probably seeing the retail trader drift this higher, not the institutions committing to the next move higher. So it's a question mark for me. Therefore, I want to find good, strong, stable, safe trade. And as I discussed earlier today, I'm looking for stocks that have good debt, has a good current ratio, has a dividend payment, and has a tax rate. Now, I'm not going to go into the decision behind that, but what I'm proposing is that if they have a higher tax rate, it means they've exhausted all the deductions they can get, and they're still paying taxes, which means they're profitable companies. So if they pay a dividend, they have a good current ratio, and they've already used all the tax deductions they can get, and they're still paying a high tax rate, they're going to be profitable for the long term. At least that's the way I'm reading into it. And we ran a search, and we came up with 40 plus stocks to look at. Many of those are in energy. So let's talk about energy a little bit more detailed. Looking at crude. Crude has fallen down, found a support level at 56, which is the annual fair price. Now, we did shoot higher and reversed, but this is the annual fair price. Annual fair price, annual fair price. So we're creating a bounce, a higher high, higher low off of that low. And if we get through this 62, we are likely to push up to 68. Even if we just stabilize here, if crude no longer moves lower, the individual stocks inside of the energy sector are going to be those stocks that have high returns even now, tax rates even now, that are structured to push them higher and pay their dividends despite the fact that crude is at $58 a barrel. From a charting perspective, we'll get into the returns on these. We'll go look at ExxonMobil, and ExxonMobil, there we go, has not sold off during all the crude sell-off and is continuing to make higher highs, higher lows, higher highs, higher lows. If crude holds up here, and especially if crude goes higher, then this stock's going to go from 114 to 120. There's going to be a solid move in there, about 5%. And we could continue to make new higher highs and higher lows. ExxonMobil, from a technical perspective, looks like a reasonable place to get in. Chevron is bouncing, but it is at the last 6-month low. I'm not convinced this is super strong, but I do like the engulfing candle that is at that support level. If we look at EOG Resources, EOG, and again, sticking to energy, higher lows as well, closer to crude as far as the way crude prices look. And if this is a higher low, I would expect at least 110. That's about a 3% move. And if we break free, I would be looking for 117. But we're not trading these for the directional move alone. What we're looking for is we're looking for all of these as potential stocks that can be directional, like Coterra, and be bull flag breakout, and be looking for a move again of about 15%, but also those that are going to pay dividends. So let's start with Coterra, and we'll go backwards through all those stocks that we just looked at. All of these are reasonable entries as far as technicals on the chart. Some are better than others, but we don't have to simply buy the stock. We're looking at the dividends and the options on these. And Coterra offers a 3.3% dividend. It just paid it, so we're not going to see this again until next year. And so then I want to look for options that will pay me at least 2.5%. Coterra, 2.5% is not at the money. We have to go in the money a little bit. And at the 27, we can get 3.65%. Now, if we assume that we can get 90 cents at 27, that return still says we're giving up 50 cents or 48 cents. And we're getting that 3.6%, assuming we get assigned at 27 and then it gets back above 27. So this doesn't give us the same kind of safety net that we'd normally like. I do like the dividend. I like the bull flag perspective, but that would have me just leaning to trade Coterra bullishly on that bullish bull flag breakout, collect the 3.3% dividend, and start selling calls against it as we reach different peaks. ExxonMobil will pay us almost the 2.5% at the money at 116, and again right on the edge as for what we're getting paid, but this is also the stock that was showing some strength and making higher highs, higher lows. So the more bullish they are, the less likely they're going to give us the premium of 2.5%, and then the more likely we'd just be better off buying the stock. And if we bought the stock, we're already past the dividend here with ExxonMobil as well, and so we just buy the stock, hope to get that 5 to 10% return, and then sell premium on the call side while we wait to collect this dividend of 3.5%. EOG that was down at its support level, you can see there we're getting our 2.5% for at the money. Whether we do the 107 and collect $3 minus the 20 cents here, we're going to get 2.5% for our willingness to own it at the current price. The next dividend date is January 16th, so we're okay if they assign this. If we sell the put at 107 and they pay us $3, our cost basis is 104. If my cost basis is 104 and we're assigned before this dividend payment, based off our cost basis, our dividend yield is actually going to be about 3.92%. Chevron, which is also at support, we're somewhere between the 2 and 4% here, so 2.5% should be reasonable. But 150 is still 2% at the money. It's right on the edge for me. I think you could take this trade, and if you got assigned, you'd be assigned at 150. You'd collect about $3 here, which means your cost basis would be 147. Now, assuming that we get $1.71 every quarter for the next year, you would get $6.84. And if we were assigned at 150 minus the $3, we would have a dividend yield of a little bit higher at 4.65% annual. And we could also start selling the calls against it over here and collecting another $1.40 every month. So Chevron actually is set up pretty decent, even though it's a little bit lighter than what I like as far as the 2.5% return. It still sets you up for a 24% return if you don't get assigned, and if you do get assigned, you're going to collect that lower cost and you're going to get a little bit higher dividend yield, about 4.7. This is the highest of the yields that we had on those energy stocks. And we'll do one we talked about during the main room discussion today, and that is on BP, and as I say, the company formerly known as British Petroleum. And they were at 2.5% just a few minutes ago at 36. So if we're willing to sell the put at 36, which is the same as buying it currently at 36.01, we're going to get that 2.5%. The reason why I want to look at this one, it is the highest of the yields of all the energy stocks that we looked at today at 5.54. So if we get assigned at 36 and we collect, maybe we can get 90 cents out of this. If we can, we're going to be collecting that 90 cents. We're going to have a cost basis of 35.10. So if we collect the same dividend, you'll notice it's 49.92. So fractional pennies there. That's about $1.99.6. We'll call it $2. If we get $2 on a stock where our cost basis is 35.10, our dividend yield is going to go to 5.69%, so almost 5.7%, higher than bonds, higher than treasuries, and in a company that is uptrending. Higher highs, higher lows, higher highs, and this today is potentially the higher low. All of these are set up to give you a good dividend yield, the potential to sell puts to get a lower cost basis, and most of them are either already uptrending or setting up for the next uptrend, assuming crude doesn't go any lower. There's lots of opportunities in this market, even on this holiday week, and there's some hidden gems hiding in the energy sector. Thanks for watching. Have a fantastic Thanksgiving, and we'll catch you all again next week.